Now that Bitcoin spent the last couple of weeks bouncing off its lows, the whole crypto industrial complex is back in full gear, trying to entice people back in. I think that would be a huge mistake for you, which is why tonight we're going off the charts with the help of Carly Garner. She's a brilliant technician who's the co-founder of DeCarly Trading, the author of Higher Probability Commodity Trading, and, by the way, our resident commodities expert, in order to explain what's wrong with crypto from at least a more quantitative perspective, not an emotional one. Now, everybody knows that Bitcoin and its ilk have had a legion of cheerleaders. Even after the FTX debacle and the wave of crypto exchanges either going under or getting charged by the SEC, or both, they haven't stopped. For years, these people told us that Bitcoin was the perfect replacement for gold as an alternative asset. They said it was a great hedge against inflation in a world where central banks were printing money like crazy. But in reality, it wasn't a hedge against anything. I want you to take a look at this chart. This is a daily chart of the Bitcoin futures and the NASDAQ 100 futures going back to 2021. What do they have with each other? Garner points out that Bitcoin's practically joined at the hip with this tech-heavy index. I was shocked when I saw this. That's what it is. You know what it means? It means it's a risk asset, not a currency, not a stable storehold of value. Imagine business owners trying to conduct transactions with shares of Facebook or Google. Hey, sold to you. It's ridiculous. They're too volatile. Bitcoin's no different. The question is, why does crypto practically trade in lockstep with the NASDAQ 100? Garner thinks it might have something to do with it. This is a little complicated. Counterparty risk. The probability that the other party in an investment or a transaction might not hold up their end of the deal. For example, if a crypto brokerage fails, like so many have, the clients might not get their money back. That's counterparty risk. As Garner sees it, whenever the economy is in trouble, investors flee from anything with counterparty risk. Few professional money managers want a piece of this stuff because it's like a ticking time bomb. Of course, you can just own Bitcoin directly and a decentralized wallet. That protects you from counterparty risk. But if you ever want to use it for anything, the risk is back on the table. And as FTX's customers learn, it can be devastating. On the other hand, gold, well, it's the opposite. Very different. Remember, for the better part of a decade, all of these cryptoids told us that gold was a thing of the past, the future belonged to digital gold. But man, Garner points out that gold doesn't have counterparty risk. The markets the gold futures trade on are actually regulated. Best of all, the precious metal's been performing very well since last October. That's your hedge against inflation or economic chaos. I love that. Look, it's not just that Bitcoin trades more like a tech stock from anything else. It's also the furthest thing imaginable from any kind of currency. Now I want you to check out this daily chart of the dollar index, Bitcoin, and let's throw in gold. Garner says it's very clear that Bitcoin's not trading.
Uber, Bitcoin, self-driving cars. Combine those three together, and you have the self-owning taxi. A car that is a corporation that owns itself, pays for the car lease, the car insurance, and the gasoline from the revenues it makes, giving passengers a ride, and there's not a single human involved in that matter.
Welcome to the Crypto Teacher. And guys, please like and subscribe if you do like what you're listening to. Inform your friends and family and spread all over social media. It is imperative that we get back to learning finances and understand how the world really works, because once we understand how the world really works, we understand that it is all planned out. Now, I want to thank those who purchased the books Crypto Teacher and the New World Order book. The New World Order book is going to show you how the world really works. And it's definitely time for you to wake up out of that sleep, especially in the times that we're in right now. I told you at the beginning of the year, in the first quarter of 2022, we was going to have an event that was going to bring us down. And then also in the fourth quarter, we would have an event that would bring us down. That's exactly what happened. And now I'm going to tell you, in the first quarter, we're going to have an event that's going to bring us down in 2023. And then also in the fourth quarter of 2023, we're going to have another main event. Now, of course, guys, the markets are still going to be pumping and dumping until they get ready to pull the full rug. But I'll let you know when that's about to happen. Now, also, I want to thank those who purchased the 3 kids books. It's time to get re-educated. And also, much love to those who've donated to the Cash Shop and Patreon. And in my Patreon, I keep you up to date with the New World Order events. Also, I give you the New World Order cryptos in the Patreon. Of course, you have to do your own research. But this next bull run is going to be a utility run. So you want to make sure that you have the cryptos that have utility. And much love to those who are shopping at both stores. Keep it coming. And of course, guys, we get into Bitcoin and cryptos first.
Don't forget to like and subscribe to the channel.
And we have Jim Cramer back at it, telling you to stay away from crypto. But guys, we know crypto stocks and gold are definitely coming back down, because we know as long as the Fed, the central banks, are raising rates and running off this balance sheet, is going to hit all assets. But we also know Bitcoin and crypto are for the fourth industrial revolution. Remember, the robots, algorithms, and drones will not work if they don't have their own money. Now machines have their own money, and I need for you to understand that, because it will allow the machines to take humanity out of the workforce. And in mainstream media, we never hear about the fourth industrial revolution. And now, because social media, we get a chance to see the World Economic Forum, and you can send those videos to your friends and family, so therefore they can hear from the leaders of the world out their own mouth what the agenda is. There is no conspiracy, people. The digital transformation is happening right in front of the masses' eyes, but they're too asleep. They're too distracted on things that don't matter. And by the time they wake up, the machines would have already taken over. We know the technology is already here and ready to roll out. And when we listen to Jim Cramer and what he stated, gold over Bitcoin and crypto, remember guys, you have to diversify yourself anyway. I'm not your financial advice, not financial advice. Please do your own research. But we know the central banks have been stacking gold. But we also know about the digital transformation. So you want to make sure that you're invested in the future. You do not want to get caught on the wrong side of history. And guys, we had BlackRock launch a spot Bitcoin private trust back in August. And where was Bitcoin at? At 23,000. And we know that's ran by Aladdin. And Aladdin is undefeated. And we know when BlackRock comes in, they're coming in to take your money. Plus, we had Signature Bank cut off transactions at 100,000 or less in USD. And we know that is hurting the retail investor. So guys, we know something is cooking up behind the scenes. And remember, the crypto teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
For a currency, telltale sign that markets simply don't believe this nonsense. On the other hand, even though gold hasn't been useful as an actual currency for over a century, it's still negatively correlated to the U.S. dollar. As Garner sees it, gold is a good way to bet against the dollar, at least a lot of dollars being printed. Bitcoin, not so much. Look at this chart for much of 2021, okay? What you see is the dollar index was trading in the 90s and interest rates were more or less non-existent. That allowed gold and Bitcoin to fluctuate on non-currency related fundamentals. But then Russia invaded Ukraine in early 2022. The dollar soared and inflationary threats forced the Federal Reserve to aggressively raise interest rates. That further fueled the rally in the greenback. In response, both gold and Bitcoin got hit. Really interesting, isn't this? Meanwhile, the dollar's been in free fall since late September. That's why one of the reasons I recommend so many of the stocks that are dollar weak beneficiaries. Gold has rebounded like crazy over the same period. It's exactly what you want. Until the last couple of weeks, Bitcoin totally failed to play catch up. Now Bitcoin's making this crazy move. Well, how good is it? Well, it's getting some lift, and Garner wants you to make sure you understand that this rebound will not be like previous rebounds. I want you to take a look at Bitcoin's weekly chart. At the end of the day, you got to remember that cryptocurrencies don't trade on any kind of fundamentals. They're not backed by anything. The crypto enthusiasts will say that the same things about the United States dollar. Oh, I've heard that so many times. But that's actually nuts. Our currency happens to be backed by the most powerful nation in the world, which has the ability to raise revenue by levying taxes. It's a big difference. So if we want to get a read on where something like Bitcoin might be headed, we need to turn to the technicals, which is why we're consulting with Garner. As she sees it, the odds favor lower highs and lower lows. We know Bitcoin had huge moves in 2020 and 2021. But that was when the Federal Reserve had cut interest rates to practically nothing because of COVID, and Congress was blasting us with handouts in order to prop up a COVID-riddled economy. Those conditions were fabulous for speculative assets like crypto. But now the Fed's tightening aggressively, and Congress is in a standoff over the debt ceiling. The last one of those resulted in major budget cuts. Could happen again. You know what that's good for? Well, I know this. It's real bad for speculative assets. Now, Garner points out that Bitcoin gapped higher in December 2020, okay, from about 25,000, 26,000. Then it gapped lower last June from 28,000 down to 27,000. Look at those two moves, okay? Looking at them, Garner thinks the line between a Bitcoin bull market and a Bitcoin bear market lies somewhere in the mid to high 20,000s, okay? Specifically, she sees a ceiling of resistance at 23,000 with another ceiling, and this is the one I think is going to come into play, at 28,000. She highly doubts Bitcoin can break out above 30,000, although, look, I have to say, you know, sometimes when you're dealing with charters, you have to accept this. If somehow it gets above 30,000, she will reconsider her negative stance. Looking at the chart, though, Garner believes the path of least resistance for Bitcoin is lower. Where to? She wouldn't be surprised if it falls all the way to 7,000 or 8,000. I'm going to repeat that because there's so many bulls. Again, 7,000 or 8,000. And sooner than most investors seem to expect. In the meantime, Bitcoin's got two potential floors of support. There's 15,000 and 13,000. Given that it's currently at nearly 23,000, that would represent a lot more downside than most of us can handle. By contrast, Garner loves what you see in the weekly chart of the gold futures. While the gold market's got a reputation for volatility and irrationality, it looks downright calm compared to Bitcoin. Of course, the precious metal still came under pressure last year as money managers used it as a source of funds. That volatility pushed gold below its uptrend line, going back to the summer of 2018, which was unfortunate because it fooled a lot of people. But after 2 months, it rebounded above that level. Again, it's also above its 200-day moving average. I like that. See, this is a very important position right here because it's so far above the 200-day. As Garner sees it, gold's previous uptrend is once again in play. She expects it to hold as gold prepares for a run to much higher prices. That said, when you look at the relative strength index, which is down here, and that's an important momentum index, it's running a little hot. So Garner wouldn't be surprised to see a modest pullback here. However, as long as gold holds above its floor of support at 1,800, she eventually could see it run to 2,100 and then ultimately to 2,600. Let me give you the bottom line here on this. The charts, as interpreted by Carly Garner, suggest you need to ignore the crypto cheerleaders now that Bitcoin's bouncing. And if you seriously want a real hedge against inflation or economic chaos, she says you should stick with gold. And I agree. Let's take phone calls. Let's start with Nick.
The market has a very optimistic view that inflation is just going to melt away. We have a different view. Inflation is not going to just miraculously melt away. It's going to be a slower, harder slog to get inflation down, and therefore we have to keep rates higher for longer and not start cutting rates by the end of the year.
We're going to a different economy, and we're going to be learning more about that as we go, but clearly we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort, and China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money. Of central bank digital currency. You know, for China, It's not just about developing its own ECNY. It's also about dominating the underlying CBDC technology in the same way they've done with 5G technology, so they can be a major exporter of CBDC infrastructure to countries around the world that desire to have their own central bank digital currency, but don't have the wherewithal to build the core technology from scratch. And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
Most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Tam save the village. Part 2. King Joshua and Drama Tam save New York from COVID 33. Part 3. King Joshua and Drama Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.